What's going on, traders? We got a few things to talk about, so we're going to get straight into it. So, the past few days have been pretty interesting, and I really made this video to really put some things to perspective here and pretty much get you guys prepared for what's likely to come, which is rate cuts. And so right now we're looking at the daily time frame for the ES, and as you guys can see, just like the thumbnail says, we are at very critical levels, or more specifically, we are at critical supply and demand zones here. And what do I mean by that? So on a daily time frame for the ES, we are at a weekly supply and demand zone. So what does this mean? So either we reject from here, which I don't think is going to happen. I do think we can potentially see a little bit more upside. But if we just if we just so happen to reject from this point, then I imagine we'll just pretty much mitigate this fair value gap all the way down to the 5,500 range. But if we continue to pump from here, then I imagine that we're going to head towards this trend line right here and possibly reject from this point on. We do reject from here, in order for me to really start looking at a bearish scenario, a really true bearish scenario, I would like to see us break back out of this weekly supply and demand zone to the downside and start heading towards this fair value gap here. At that point, I do think that the bear run is over for the short term and that we can start possibly entering a bearish market if we just so happen to get into the supply and demand zone, hit this trend line here, and break back down. It's also important to note that there's a lot of turbulence in this area, and I mean a lot. So we're going to need some pretty good news for us to really break out of this area to the upside, which obviously I'm talking about rate cuts here. So we zoom out in case you're wondering where this trend is coming from. We zoom out and you guys can see, so you know I don't make these trend lines up. We bounced here, we bounced here, we bounced and consolidated here. We broke down and then we broke back above. We consolidated above the trend and within the weekly supply and demand zone, broke down, and now we're back here once again. So that is the potential move that I'm looking at. In my last video or two, I said that if the ES gets above 55.50, that's pretty bullish for the market. And if we do continue to head higher to the upside, I'm looking at a move towards 56.50 and 5700. It's also important to note here, and we're going to get into the whole head and shoulders pattern thing in a bit. I just pretty much erased most of the things that I was talking about because I didn't want to just constantly regurgitate the same thing every single video. But there is a potential inverse head and shoulders pattern here. I guarantee no one's going to argue about this one. Guarantee it. They argue about the actual head and shoulder patterns, but they never argue about inverse head and shoulders patterns when it's bullish. So you got a shoulder here, head here, another shoulder here, and our neckline will be all the way up here at around the 5700 range. So that's what I'm looking at in regards to the ES. I'm not full blown bullish or full blown looking at all time highs, but I will say that things are looking like we could see more upside, at least heading into tomorrow. And we're going to get deeper into what I think is going to happen heading into rate cuts. We look at the NQ. So the NQ, interesting as well. And we're looking at the daily time frame. We pretty much blew past this fair value gap. Well, I wouldn't even say blow past, but we left this fair value gap behind. So at some point, I do imagine we're going to revisit this. So while we're pumping to the upside, we are leaving fair value gaps open towards the downside. So that leads me to believe that at some point in time, can't really say when, we're going to revisit the downside. And if we continue to pump higher and higher, chances are we're we're going to see a major drop in the future. Okay. And I don't think anyone will be surprised by that, considering that September is notoriously bearish and October is notoriously bearish. Now, it's important to note that the weekly supply and demand zone is all the way up here at 20,300 for the NQ. And if we just so happen to break above 19,500, then chances are we're going to head towards that 19,800 target and pretty much be within this area. Now, there is a double bottom forming here where we have a bottom here, and then we have another bottom here. And then our neckline would be up here at around the $20,000 mark. It's also not $20,000, but 20,000 mark. Okay, and so we have a low here, and then we have a higher low forming here as well. But it's important to note that we have a high up here and a lower high here as well. So bears and bulls are, like always, pretty much fighting it out for pretty much control of the overall market or the general direction. And so far, bulls are winning, at least for the short term. At first, it was bears winning. We see bears were winning all within this area here, and now bulls are taking full control all over again. So we could be heading higher. So the head and shoulders pattern. that we've been talking about for quite some time. I want you guys to keep in mind that these are the weekly time frames. The stuff does not have to play out right away. Okay. We're talking about a weekly time frame. So it could take a month, it could take 2 months. We may not even see this play out at all. But regardless, you can't expect this to play out. I can't expect these to play out right away. Okay. Keep in mind, the head and shoulders pattern is not yet confirmed until we break the neckline. Okay. Until we break the neckline, this thing is not confirmed. Our neckline is all the way down at 17,500. So this will be our neckline right here. All right. So we're going to color code it blue, and boom, there you go. So that's our neckline right here. And in case you think I'm making it up, we bounced here and we bounced here. So this will be our neckline at around the $17,500 mark. We break below this, and chances are we're going to start clearing out all these fair value gaps to the downside. This one is mitigated, this one is not, all the way towards the 15,500 range. And I do think at some point in time we're going to actually head down there, because it's very rare I've seen a fair value gap not get mitigated. Okay, whether it's for the short term or the long term, they get mitigated pretty at a decent pace in comparison to regular gaps. So again, I want to reiterate that this is the weekly time frame. I never gave an actual time frame on when the market is going to drop. I just want to point out that these head and shoulder patterns are still here, and they're not, and although they're not yet confirmed, they're still here. Okay, so just want to make that clear, because I just really want to make that clear so no one's like jumping the gun and assuming that I'm talking about tomorrow or something like that. Weekly time frame may take a few weeks to play out, if they play out at all. Now, another thing, and this is why I'm saying bulls and bears are pretty much fighting for control right here. We have a double bottom. I think I mentioned this in the last video. If I didn't, well, I'm mentioning it now. We have a double bottom here, and I'm sure no one's going to argue this one as well. We have a double bottom here, and if we just so happen to break the neckline at around 20K, then chances are we're just going to head towards the 20,300 range. And after that, I don't necessarily think we're going to head higher, but it's really up in the air. Now, I want to put things into perspective here. We are moving very fast. Okay, we are moving very fast. And it looks like we're doing the same thing that we've seen in past all over again. Now, remember, I told you guys, we like to see the market have an elevator down and a staircase up. Right now, we are once again taking an elevator up. If you need an example, the perfect example is right here, where we just had an elevator up. There was hardly any basis at all. There was a base here, but we just kept pumping and pumping, and then eventually we saw a sell-off. All right, so we want to see a staircase up and an elevator down. If you're new to trading, or you're new to the idea of or the concept of that, this will be a perfect example of a staircase up, where you pump up, you break out, you form a staircase, you form a base. You break out, 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 and then you sell off, and then you have your elevator down. All right. Now, elevators down do sometimes form bases, but they're not as often, they don't show it up as often as when you're looking at a bullish market to the upside. So that's what I want to make clear here, is that we're pumping very fast. We went from, and keep in mind, this happened at around midday towards the afternoon yesterday, where we went from 18,500 on NQ, and now we're closing out the day, or we closed out the day at 19,400. That's a lot of movement within one day. Okay. Within one day, that's a lot. And keep in mind, we've been pumping for the past 4 days. And we really haven't seen much of a cool off besides that little flash sell off that we had yesterday. So I do have reason to believe that we may be buying the rumor, selling the news. Okay, and what I mean by that is that we do have rate cuts coming in September 18th, and I think it's obvious, at least in my opinion, I think it's obvious that we're pretty much buying the rumor right now. Are we actually going to sell news? That's up in the air. But the market, like I said before, it likes to buy hope and sell guarantees. All right, so write that down. Okay, buy hope, sell guarantees. Write that down. That's a whole bar. Shout me out in your mixtape. Okay, but regardless, again, I think right now at this point we are clearly buying the rumor, and the market is moving very fast, a little too fast for my taste. But if we continue to pump tomorrow, I mean, even after hours right now, the Nasdaq is still pumping higher. If we continue to do this until tomorrow, I will be a little skeptical about next week. Okay, but we'll see what happens. I think the Nasdaq is going to continue to head higher. I think we could see a target of 19,800. Can that all happen tomorrow? At this point, I wouldn't be surprised. All right, so that's what we're looking at in regards to the Nasdaq. Now, the next question is, well, because I've seen this question a lot, and I don't think this is going to happen. I want to make that clear. What if the Fed doesn't cut rates on September 18th? What if they change their mind because inflation is not at 2%, whatever the case may be? I don't think that's going to happen, but if it did happen, I imagine the market is going to crash. Like almost 90% sure that the market is going to crash. Why? Because we've been pumping since January or since Nvidia earnings, whenever that was, since Nvidia earnings and the whole AI thing, we've been pumping since then, and we've been pricing in like 6, 7, 8 rate cuts that were supposed to happen that never did. And we spent the majority of the year pretty much pricing in that data. And now we finally get a possible or promise, or I guess somewhat of a guarantee going to get rate cuts on September 18th. And if the Fed decides that they're not going to do that, then I do imagine a lot of the gains that we gained throughout the year are going to be given back because the market has nothing to look forward to. Okay. I don't think it's going to happen. I think there's a very slim chance it's going to happen, but in case it does happen, I do imagine the market is going to react extremely bad to that information. So we'll see. I think we're going to get rate cuts. I think it will look very bad on the Fed. I imagine somebody's going to get fired if that was the case, but we'll see. So, so this is where things get really interesting here. And so when we are talking about triple Qs, I want you guys once again to put something in perspective here. We're looking at the triple Qs. My computer's like that slow. I think it's downloading something. Or updating. I want you guys to keep in mind here. We're looking at the daily time frame. We moved from 450 to 470 in less than two trading sessions. It's a lot for less than trading. But I mean by less than two, I mean we started pump. We went to 450 when we had that little flash of light there, and then started pump towards the end of the day, and now we're ending today at 473. I don't know about you, but that's not normal. Okay, in my opinion, I don't think that's normal. I mean, look at this. This is absolutely insane. And I'm not hating, I'm not against it or anything like that. I just think it's very, very interesting just how fast we're moving. And again, if we continue this tomorrow, again, I think next week is going to be very interesting. Very, very interesting next week. All right. And I think the rate cut news is going to be it may cause some type of sell off where we see a buy the rumor and again buy the rumor sell the news is a common thing in the market, so I don't think anyone can disagree with at least that term. But if we continue to pump, and I mean like really really pump until rate cuts, I don't think once we get the news, I don't think it's going to be like an initial sell off, but I think maybe within a few days after that we may see some type of huge sell off. All right, it's up in the air right now, but it's important to note where we're at on the triple Qs. We look at the let's go to the weekly time frame. As you guys can see, I still have the head and shoulders pattern here. It's not been broken. It's not yet voided or anything like that. You got a shoulder here, head here, another shoulder here, our trend line. You bounced here, and then you will have a bounce here on the daily time frame. And right now, we're pretty much retesting the trend of the head and shoulders. If we just so happen to close above this trend, in regards to the head and shoulders. So let's say tomorrow we continue to pump and we head towards 480, which I do think is possible at this point. We head towards 480 and we just so happen to close the week up here, then this head and shoulders pattern will be voided in my opinion. It is possible that we form some type of double top here, but we'll see what happens. But regardless, I would say the head and shoulders pattern will be at least voided, and maybe we start seeing a double top if we just so happen to get a red candle next week. We'll see. But right now, still in play. Our neckline is around the 430s, 420 range. And then we go down to our daily time frame. And once again, we are at a very, very critical area here where we're hitting this trend right here. As you guys can see, we zoom in, we bounced here, we bounced here. We pretty much consolidated here above the trend. We broke down, and now we're retesting the trend all over again. Okay, so really, really interesting spot we're in. It's also important to note that we do have a fair value gap that needs to be mitigated all the way at the 490s, 492 range. So if we do break out of here, then I most likely would be looking at calls. If we just so happen to break above 480 and actually close on Friday above 480, then I do imagine we're going to continue to pump until rate cuts. Again, I think it's pretty obvious that we're pricing in this data. We're moving very fast, a little too fast for my liking, but do what you want. Make your money to the upside. Enjoy it while it's here. I am all for it. All right. So if we just so happen to reject from here, okay, let's see what happens. Let's talk about what happens if we do just so happen to reject from this point. It's important to note that we still have this fair value gap all the way down to the 440, we'll say 440 range that needs to be mitigated right where the 200 daily SMA is as well. So 445, 440, give or take. There's also a fair value gap that we just left open at around the 465, 460 range. All right. So at some point, again, I think we're going to sell off. All right. Because we're leaving, while we're pumping to the upside, we're leaving fair value gaps open to the downside. While we're doing this the whole time, we're rallying to the upside, but we're leaving stuff open to the downside. So maybe we start mitigating this tomorrow and get it out the way, and then we start pumping up. But if we continue to head higher and just leave this behind, and we just break above this whole area right here, which I find really tough to see happening, but if we just so happen to do that and we leave this behind, that just only confirms that we could be looking at a sell off in the near future. All right. And I mean a major sell off. All right. We're looking at the SPY here. SPY, we're at another critical area here on the SPY as well. Now, on the SPY and outside of the ES, we actually broke into the weekly supply and demand zone, and it looks like we're heading towards 465. If we break above 460, then chances are we're heading towards the previous highs. I think that's pretty obvious. I don't think you guys need me to tell you that we're heading towards the previous highs at that point. And then right here at well, not right here, but at 465, I was trying to adjust that. We zoom out at 465, we are going to either break above it. And I told you guys, if we just so happen to break above 465, not four, I keep saying 465. I'm sorry. 565. If we break above 565, then chances are we're heading towards our targets, all-time hard targets that I was talking about at 580 and 600. All right. Now, I don't think we're going to see 600 prior to the rate cuts, but I do think the rate cuts, if we do get it on September 18th, are going to motivate that move to at least 600, if not minimum 580. So this trend line right here, we bounced in this area right here, we bounced here, we consolidated, we broke down, and then we're breaking it back above, and it looks like we're heading back towards it. We'll be at the top of the weekly supply and demand zone, and we will be at the bottom of this trend line. So this will be a very interesting spot. I think this is a good spot to start loading up puts. It's very risk off, a risk off play. So I would take the risk if we get there, once we get there, and then see what happens from there. So that's just me. Do what you want with the information. But I really think SPY is since we're in this weekly supply and demand zone, I think it makes sense for SPY to head higher towards 565. I don't think that's too much to ask at this point. We go down to the 4 hour time frame. Let's see if we're leaving anything open. So yeah, as you guys can see, this is just how great fair value gaps are. We're leaving another fair value gap open right here, and we pretty much went down to retest this one. We didn't mitigate it. We just pretty much bounced off of it, but it looks like we're heading towards. There's a fair value gap that needs to be mitigated up here at around 562. So I do think SPY is heading towards that point, and after that, we'll have to see what happens. All right. So that's really all well, actually, I don't. Okay. I want to talk about Apple. All right. I really want to talk about Apple because I find Apple very, very interesting here. So let's look at Apple. And so what I've been noticing about Apple, and I want you guys, and I really want you guys to keep something, like really keep this in perspective here. The triple Qs went from 450 to 473. Think about this. Really think about this. 450 to 473. The SPY, it went from what 540 and now is pretty much at 560. And this happened within less than a trading session. Less than a day's trading session, right? This all happened within that time frame. And you're telling me during all that during that movement, Apple only went from 117 and is not 117, 217 to 222, 223. I don't know. Do the math there. It just doesn't make sense. And that only tells me that Apple is waiting on something. And I think Apple is waiting on a sell off. I don't think Apple wants to pump. I think the market is dragging it higher. I could be wrong there, but I don't think Apple wants to pump because, again, the triple Qs moved 20 points within 2 days or less than really less than 2 days. And you're telling me Apple can only make a 5 point move? If not that, it's really like a 4.5 point move, right? And that's all it can really do within that much movement from the triple Qs in the spot. I don't know, something to really think about. It's also important to note that we are below this trend, but Apple is just not showing signs that it really wants to go higher. If anything, it's just really being stubborn and doesn't want to go anywhere. Now, can it go higher from here? Absolutely. It can head towards 225, 226 and hit this trend line here. But after that, I think Apple is going to be one of the leaders in a possible sell off if we do get one because Apple has no reason right now, at least no fair value. When I say no reason, I mean any fair value gaps to the upside that needs to be mitigated. If anything, it has fair value gaps to the downside that needs to be mitigated. Okay, so right now it keeps rejecting this fair value gap. It keeps rejecting this trend right here. We actually can zoom in so you guys can actually see because I know wicks are hard to see here. But right here, you rejected once, you rejected the trend twice, Apple just is not showing signs that it wants to go higher right now. Okay. So I think that's very interesting. I think, again, this is speculation, but just from looking at this and just watching how Apple is moving in comparison to the market, it's barely moving. It seems like it doesn't want to go higher. It's clear that it's just getting carried higher. All right. Again, the triple Qs, it moved from 450 to 470 since yesterday. And Apple has only been moving like 1 or 2 points a day, if that. Something to really think about here. So that's all I really have for this video, guys. Discord link is in the description below. If you want access to our plays, if you want access to our AI bot, if you want access to all our